market is here again, and an oversupply of capital is the main reason for the market's turmoil, says Skip Cooper, president of AmWins Group Inc. In this interview with Insurance Journal's Mark Wells at a recent NAPSLO Annual Convention in San Diego, Cooper says that while the capital is a bit more disciplined than past soft market cycles, carriers are still hurting.
Let's talk a little bit about the industry and what's going on. Obviously, the soft market is affecting everyone. It came on suddenly. What do you see out there? Is anything, any indications of the end of the market at all yet?
Well, I think there's a there's a potential for some pretty dramatic changes in the market as of about midnight tonight when Hurricane Ike makes landfall. But there's so much capital in the industry. The capital is there to, I think, replenish whatever that takes out pretty quickly, particularly if they perceive that the market then presents an opportunity for a better rate environment. The oversupply of capital is really the simplest reason and the main reason for the market going the way it is. Interestingly to me, the capital's a bit more disciplined, I think, in some aspects. So while there's a lot of it still available in the background, the individual carriers that are participating in this current market are beginning to hurt pretty badly. But it's not, in the past you've seen a reduction in the base capital of the industry, I think, that is caused problems, whereas now it's more of a capital not willing to participate in some of the things that the insurance carriers are feeling like they're needing to do right now to compete, which is a little bit of a difference.
And as I understand it, the third quarter numbers are just coming in for the reinsurers, and they're not very good. So that would, I would think, would help hasten the demise of the soft market.
You would think so. One of the things that I understand from discussions with various market segments that's very, very different about this particular soft market as well is that it's predominantly driven by insurance carriers. Historically, a lot of the soft markets have been driven by reductions in reinsurer cost and additions of capacity from reinsurance market to the direct markets. I think this has been a very unique last 2 or 3 years in that the reinsurance industry has pretty much, at least within our end of the world, which is the wholesale E&S carrier marketplace, there's been a definite disconnect, and the reinsurance companies have remained fairly disciplined this time while the insurance carriers have continued to cut rates. So there's a gap between what they're having to buy and what they're selling, they being the direct carriers that we deal with. The result of that is that the insurance carriers are having to retain more on the front end, and they're having to continue to pay a more stable price for their reinsurance, which becomes a larger percentage of their income as prices go down.
Okay. Also, historically, the E&S market was the market of last resort, and that's really changed over the years, and it seems to be more of an innovative market, more of a more involved in the regular flow of business from the retail agents. Can you talk a little bit about that and tell us what AmWins is doing there?
Right. I think that's a very good point. As you mentioned, traditionally, for over the years, in the original evolution of our segment of the industry were surplus lines type policies where you needed excess capacity on a casualty risk, or you had vacant buildings on property and that sort of thing. What's happened, and I think the initial real thrust of growth of the way the market's changed occurred with the new capital that came into Bermuda a while back. And what they did is they wanted to do a different model from what traditional distribution in the United States of capital had been. Traditionally, you had the USF&Gs of the world, let's say, to pick on somebody that's not around to defend themselves. They would have 30 branch offices around the United States, and you had all the infrastructure costs, you had all the problems with hiring staff and having underwriters. The newer capital that came in wanted to be able to deploy quicker and then get out quicker if it wanted to. And that wave of people that came in recognized that the easiest way to distribute to a large number of people was the wholesale broker. And we essentially became their distributors almost as a branch system would have been in the old days for other people. The result of that is that they're not looking for just surplus lines business. They're looking for a cross swath across the industry of business, and it's made the wholesale broker become more sophisticated and increase the scale of what we do.